I am AI Avatar of CA Ratan Mundra. International Financial Services Centers, or IFSCs, are a strategic initiative by the Government of India to position the country as a global financial hub. The government has introduced various income tax relaxations, particularly TDS exemptions, to make IFSCs more competitive globally. In this video, we'll cover the legal framework of TDS exemptions, impact analysis on existing units and service providers, procedural requirements, income tax and IFSC compliance obligations, key challenges, safeguards, and grey areas. This is a must-watch for IFSC units, service providers, finance teams, auditors, and compliance professionals. The core of TDS exemptions for IFSC units lies in Section 80LA of the Income Tax Act, read alongside Section 197A 1F. This allows IFSC units to claim 100% deductions on specified income for up to 10 consecutive assessment years. These exemptions are designed to reduce cash flow blockages, facilitating smoother operations, especially during the initial years when tax liabilities could be a burden. IFSC units in aircraft leasing and ship leasing benefit from TDS exemptions under Section 194-I, including lease rent and supplemental lease rent. Impact analysis on existing units improves cash flow for global lessors operating in India, positions India to rival global leasing hubs like Dublin and Singapore, lowers cost of capital for airlines and shipping companies in India. How to use TDS exemptions. Section 80LA must be opted for by IFSC lessors. Form 1 statement cum declaration must be submitted to lessees. Lessees are authorized to stop TDS only after receiving Form 1. Challenges and ambiguities. Mixed-use leases, operational versus financial. Cross-border tax treaty overlaps. Safeguards. Lease agreements should explicitly confirm IFSC status. Maintain documents confirming IFSC approval. Annual eligibility checks are necessary. Banking units and finance companies in IFSC are eligible for TDS exemption on various financial services like interest on external commercial borrowings, ECBs, and loans, dividend income, commission on factoring and forfeiting, referral and brokerage income, impact on existing units, facilitates offshore lending from India, makes IFSC-based lending more competitive globally, streamlines treasury operations for Indian banks. How to use TDS exemptions. Opt for Section 80LA, submit Form 1 annually. Ensure the pair reports non-deduction in TDS returns. Challenges. Differentiating domestic versus offshore lending. Misclassifying interest versus fees. Safeguards. Ensure clear loan agreements. Proper ECB documentation is critical. Separate accounting records for IFSC-related income. Fund management entities operating in IFSC enjoy TDS exemptions on professional and management fees, including portfolio management fees, investment advisory fees, management and performance fees. Impact on existing units. Attracts offshore funds to India. Boosts asset management activities in IFSC. How to use TDS exemptions. Ensure IFSC registration. Opt for Section 80LA compliance. Submit Form 1 each year. Challenges and ambiguities. Performance fees versus incentive fees. Allocation of fees between onshore and offshore advisory roles. Safeguards. Clear fee bifurcation in agreements. Ensure transfer pricing documentation and functional analysis. IFSC capital market intermediaries, such as broker-dealers, investment advisors, investment bankers, credit rating agencies, custodians and debenture trustees, enjoy TDS exemptions on various professional fees, advisory services, and commission income. Impact on existing units. Makes IFSC a hub for capital market services. Reduces friction in cross-border transactions. How to use TDS exemptions. Mandatory IFSC registration. Submit Form 1 annually. Challenges. Confusion between commission and professional fees. Cross-border advisory classification. Safeguards. Service-specific agreements to clarify income types. Keep IFSC approvals updated. Insurance intermediaries and International Trade Finance Service (ITFS) providers in IFSC are exempt from TDS on Insurance Commission, Trade Finance Commission. Impact on existing units. Strengthens India's global trade finance positioning. Promotes reinsurance and specialty insurance services. Challenges. Difficulty in identifying qualifying insurance activities. Complexity in managing multiple intermediaries. Safeguards. Compliance with IFSCA regulations. Clear commission structures for transparency. Fintech and batch service providers are key to the IFSC technology ecosystem, benefiting from TDS exemptions on technical fees, professional and advisory services, compliance, accounting, taxation, AML services. Impact on existing units. Attracts global fintech players to India. Reduces the compliance cost burden for fintech companies. Challenges. Misclassifying technical versus professional fees. Mixed service offerings can complicate TDS applicability. Safeguards. Proper service classification. Evidence of IFSC registration. Detailed invoicing for each service type. Recognized market infrastructure institutions, example stock exchanges, clearing corporations, depositories, enjoy TDS exemptions on professional and technical fees. Interest income. Data center end. Penalties levied on members. Impact on existing units. Enhances IFSC's capital market infrastructure. How to use TDS exemptions. Ensure IFSC recognition. Align business approval linkage with IFSC regulations. Challenges. Misclassifying penalties versus fees. Differentiating rent from service charges. Safeguards. Legal vetting of income heads. Regular compliance audits. To qualify for TDS exemptions, every IFSC unit and service provider must be IFSC registered. Operate within approved activities. Opt for Section 80 LA benefits. Submit Form 1 to the payer before payment. Ensure payers report non-deduction in TDS returns. Keep separate books for IFSC-related income. Conduct periodic internal and tax audits. The key risks include delayed Form 1 submission, misclassification of services, income earned outside IFSC-approved scope, incorrect assumptions about blanket exemptions. Safeguards include annual compliance reviews, agreement-level scrutiny, expert tax opinions, strong internal SOPs. TDS exemptions for IFSC units offer powerful incentives, but compliance discipline is essential to avoid penalties or tax demands. At Moonses and Management Consultants LLP, we help IFSC units navigate end-to-end tax structuring, compliance implementation, risk assessments, regulatory liaison. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSC, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.